Hey guys, what's up? Spenny here. So in today's video, I'm going to do a full analysis on Shift Technology stock. That ticker symbol is SFT. I'm actually going to be doing a three-part video series for this stock. So I'm going to go very in-depth and show you guys a lot of research into this company if you're serious about investing into them in the long term. So this video is going to be part one, and this is going to be an overview and in-depth analysis of what the company does. The second part, I'm going to compare Shift to their competition. So that's Vroom and Carvana. Now that's super important to do when investing into a company. You really want to go in depth into the competition and see if Shift has an edge over them. I think you can make a lot more money by investing into Shift over their competition. And so I'll definitely be going into that in this video series. And then the third part of the video series, so the third video, is going to be a stock price prediction. So I will be doing an actual fundamental analysis projecting their revenues and see how much money we can really make here. But in today's video, this is going to be the in-depth analysis, the core of this business. So make sure you guys stay tuned to the end if you're serious about investing into this company. And make sure to drop this video a big thumbs up. It really helps out. And feel free to subscribe if you want to see more content like this. Anyways, guys, let's get straight into the video. Okay, so first thing is first, let's take a look at their management team. So George Arison here is their co-CEO. This guy recently did a conference call with analysts, so he's the one who's really leading this company. He founded Shift in 2014 with a vision to build a revolutionary way to sell cars and co-founded Taxi Magic. This guy also has worked at Google, and you can see overall, their management team has worked at some pretty big name places. But George founded Taxi Magic, and so this guy's he's a tech guy. He knows technology, and that's really what Shift Technologies is. It's a technology, and if you go to their website, you can tell it's a really well done website. So this guy knows what he's doing on that front. And Taxi Magic was an app back in 2008. So it says here, a new app that recently went live on the App Store is doing what others can't. On-demand cab service from your iPhone at the push of a button. The application connects you directly to taxi routing systems, allows users to book cabs without ever needing to speak to an operator. So yeah, this guy's a tech guy, and now he's running Shift Technologies. Pretty good. I do urge you to actually listen to their recent conference call, get an idea of how he is. My impression from George is that he's pretty new to speaking about a public company. They've been private up until just a few months ago. So there's definitely going to be some growing pains here. But overall, I think he knows what he's doing. So anyways, guys, moving on, let's look at what Shift actually does. So you can see here it's just a simple 5-step process. This is very similar to Carvana and other car companies. This isn't super unique to Shift, but there's not a lot of competition in this space. So anyways, this is what they do. A really simple business model, but massive opportunity here. And that's really what I want to get into in this video, is how big the opportunity is and how Shift has been performing. So moving on to the next slide, Shift has a 3-step full service auto sales. So step 1 is acquire. So instant quote, evaluation of customer location, consumer cars equal best inventory. So they get their quote, and then next step is the recondition. So they do 150 plus point inspection, in-house reconditioning, digitally enabled. This is really important to get their margins up. They need to do this stuff in-house. We're going to be getting more into that later in this video. There's some really important things I have to note for you guys, and a recent problem they've been running into. I'll cover that later in this video. But the third step is the omni-channel sale. So this is the buy it now, at-home test drive, fully digital financing, centralized sales. So this is mostly an online experience, super easy to do, and not a lot of competition right now, and a massive total addressable market. But right now, Shift is really the baby of this business. They're only on the West Coast in the United States. They're mostly around the Bay Area, so San Francisco, LA. They're jumping into Seattle, Portland. So they're jumping up the West Coast. They're really trying to dominate that area first. And then once they get a good chunk of that market share, they're going to be expanding into more markets. And they're actually just expanding into another market that I'll touch in just a second as well. But let's move on to the next slide here. This is covering the reviews. So how do customers like shopping on Shift compared to their competition? Well, Shift is sitting nicely in the middle. Vroom has the worst reviews by far, so that's great for us. Shift is pretty comparable to Carvana, but Carvana does have the best reviews right now. So yeah, Carvana is the biggest company out there though for the e-commerce used car sales business. They're really well established, and I guess customers like shopping with them, but Shift is just right behind them. So hopefully Shift can catch them, but either way, if you're gonna buy a used car, you're likely just gonna be shopping around on several different sites, find the best price, and then buy it. I mean, you know, that's really how it is when you're looking for a used car. Reviews do matter, but at the end of the day, if Shift has better inventory, people are going to buy off Shift, not Carvana. So it's not the end of the world. Their reviews is good, and that's what matters. So this slide is actually really interesting. This is where the market opportunity is, guys. So the US used vehicle sales accounts for about $841 billion a year. Massive total addressable market. And the crazy thing about this, and this is it's just prime for disruption, is because 50% of those sales is peer-to-peer. So the private sector is accounting for a massive amount of that 841 billion. Now, I don't think that that's going to be the future. I think peer-to-peer sales is going to go nearly extinct well in the future. We're looking 10, 15 years out. And Shift can really take advantage of this trend. So in my opinion, it's actually a good thing that 50% of sales is still peer-to-peer, because this is a no-brainer that over time, everything is moving online. It's such an easier experience of buying through something like Shift and Carvana. You don't have to worry about getting scammed through some private person. It's kind of awkward going on those sites. They're usually not the best quality. So it's not the greatest experience. So in my opinion, this is a no-brainer. Things will be moving towards Shift, Carvana, and Vroom. So this is a massive tailwind behind them. In my opinion, this is about a 420 billion tailwind that's going to be pushing their sales up over the next 10 to 15 years. And plus, this market is going to grow. In 10 years, it's probably going to be well over $1 trillion selling annually. So massive opportunity. And Shift can really take advantage of that trend moving to the online place. Companies like Shift, Carvana, and Vroom are buying up all those used cars as well. So, I mean, yeah, the peer-to-peer market is really going to disappear over time, guys. So this should get you really excited if you're investing into Shift. And so Shift does do their own reconditioning, which is really important for high margin. So think Tesla. Tesla does everything in-house. Carvana also does this as well though. So it is really important to stay competitive that they do their own in-house reconditioning. Right now they have about 5 hubs. So you can see San Diego, LA, a couple around Sacramento and San Francisco, and then one in Portland. So in these in-house reconditioning centers, they do a 150-point inspection by certified mechanics. They take their professional photos here. And so yeah, I can't stress enough, this company is very small, guys. They're really only on the West Coast right now, but there is a massive opportunity here. Literally just the West Coast here is bigger than all of Canada's market opportunity. So they're basically taking on a country by just tackling this market right now. And they are moving into one other market that I will cover in just one second, guys. But anyways, they have 5 hubs. This is super important for margins, but this is also where they're also having a problem. So in their conference call that I listened to, the CEO was talking about how they're having trouble hiring enough mechanics in these areas. So right now they don't have enough mechanics, but they're expected to have that fully staffed by the end of Q1 of 2021, which I guess is this year now. So yeah, they're almost have that fully staffed, but they were running into those problems over this last quarter. So what that means, they had to outsource this. So they had to send these cars to other reconditioning centers to do the 150-point inspection for Shift. So that's going to hurt their margins and their total gross profit at the end of the day. So this next quarter could be a little bit rocky because of that. It will be sorted by the end of Q1 here. But anyways, guys, this could put downward pressure when we see that next earning report. I don't know, but it definitely could. So anyways, guys, let's move on to what their growth strategy is. So they're going to increase market penetration, and that's primarily in the West Coast area. They're really trying to take market share there right now. And then they're going to do geographic expansion. So they're going to be expanding into other areas. Obviously, they have the rest of the nation to expand into, so massive opportunity ahead of them. Ancillary product offerings, so more products, different warranty offerings they can do. And then just third-party strategic inventory and marketplace, and strategic M&A and omni-channel platform. So they will probably do some different merger and acquisitions in the future. I think they'll definitely be looking at that when they try to expand into different markets. It might be cheaper for them just to acquire another company, rather to build out all that infrastructure again. This is something that they talk about in their conference call as well. So I think we will see that in the near future as well. Okay guys, so on this slide they talk about the markets that they're going to be moving into. So right now they're only operating in 6 US markets, that's just the West Coast right now. But they're going to be trying to expanding into at least 2 new markets a year. So not super aggressive, but 2 new markets is really going to keep a nice steady increase in their top line without overextending themselves and being at risk of bankruptcy. So I kind of actually like this approach. And just recently they announced the newest market is Seattle, and then the next market is going to be Austin, Texas. And it actually says we are also excited about launching vehicle acquisitions in Austin, Texas this week. So they are jumping into that market as we speak right now. I think there's a lot of big market opportunity there. And Texas is very business friendly, not so much like California. So I think this is gonna be really a nice asset to their business. And also to talk about some of the ancillary products that they offer. So they do offer financing, vehicle protection, tire and wheel protection services. So this is really high margins and really helps that bottom line growth. So they'll definitely be expanding that offering in the future as well. And we don't really need to talk anymore about the reconditioning. We already know the benefits of that. It's really important for that to be in-house. They have had to outsource some of that recently, which I said earlier will affect their margins and could put some downward pressure on the stock on that next earnings report. So just be cautious of that. So moving on to the next slide, just talks about the market expansion here. I won't get too much into this, but just where I highlighted, they take a CapEx light approach. So like I said earlier, they're not going to overextend themselves. They're taking a pretty safe approach when expanding into future markets. I like this. I don't think they need to be overly aggressive. They talked in their conference call how they have a lot more room to take market share in the California market, so they don't need to be aggressive in obtaining new markets. So moving on to the next slide, guys, this video is getting a bit long, is how their gross profit is improving over time. So it says here that their e-commerce gross profit per unit increased $545 per unit, up from $360. So this is a nice number that we're seeing improve. Another one is their other gross profit per unit. So that increased to $745 per unit, up 48% year over year. I like this. Numbers are moving in the right direction. And then their adjusted gross profit per unit was $1,319, up 89% year over year. So these numbers are moving in the right direction. You want to definitely be watching these in the future. And then the last thing I want to show you guys is their financial outlook, so how they've actually performed this year. They have grown about 163 to 174% year over year growth, the strongest revenue growth rate in the company's history. So they've had an absolute phenomenal year, and next year they're projecting again over 100% growth. Super high growth stock. I'll be going into that in my next videos. But anyways, guys, this video was just to give you an overview of Shift. Put it on your radar. I will be doing future videos very soon on Shift. I want to really go in depth in this stock. I am investing quite heavily into Shift right now. I think we could see some short-term down pressure on the stock, but when you look 5-10 years out, I think there's an unbelievable opportunity here. So this is really a long-term view I'm taking, and that's why I'm giving you guys a full analysis on this company. Deep dive into what they do, deep dive into their competition, really look at their potential market cap in the next 5-10 years if they can perform pretty well. In my opinion, it's really hard for Shift to not be successful. They're in an amazing industry right now, lots of tailwinds. They got a lot of good stuff going for them. So I think this is a pretty easy investment to double, triple, 10x your money in the future. But I'll be getting into that into future videos, guys. Anyways, thanks for watching till then, guys. I really appreciate that. Hope you enjoyed this video. Make sure to drop it a big thumbs up if you did, and I'll see you in the next one.
Oh.